It seems like Chapter 3 is something of a challenge, so I want to go over the basics of it again to reinforce the fundamentals. This file is the Chapter 3 model. It contains the exhibits used in the chapter examples for allied food products. These are the ones we used in the PowerPoint presentation, but we're going to go over them again. This tab has the full set of data. The input data up there at the top, the balance sheet, scrolling down, statement of cash flows, the income statement, statement of stockholders' equity, per share data, and the calculations for free cash flow. So first off, let's look at the balance sheet. This is not an accounting class, but you should be comfortable with the basics of a simple balance sheet. Pretty obviously, it has to balance. Total assets must equal total liabilities and shareholder equity. So on the asset side, recall, assets are listed in order of liquidity, how fast they can be turned into cash. So cash is obviously the most liquid. Accounts receivable next, and then inventories. The sum of those three is total current assets. Net plant and equipment can also be called net fixed assets. Either way, it represents total fixed assets minus accumulated depreciation, or basically the book value of assets. The sum of current and fixed assets is total assets. On the liability side, liabilities are listed in the order they must be paid. Current liabilities are those due within 1 year. Accounts payable, accruals, and notes payable. Those three in this case total up to total current liabilities. Long-term bonds is long-term debt. Current liabilities plus long-term debt is total liabilities. The stockholders' equity section includes common stock and retained earnings. The common stock line only changes if stock is either issued or repurchased. Retained earnings are adjusted each year as a result of the outcome of the year's operations. Retained earnings for 2016 is equal to 2015 retained earnings plus the addition to retained earnings for 2016. And we'll see this in the statement of stockholders' equity. Total common equity is common stock plus retained earnings. Total liabilities in stockholders' equity is equal to total liabilities plus total equity, and that has to match total assets. Notice down the right-hand side, the basic layout of the balance sheet in blue. That's what you kind of ought to have in your mind, that's how it's laid out. Now to the income statement. It always starts with sales or revenue. From there, we subtract various expenses to arrive at net income, the bottom line. For our purposes, we'll be dealing with a very simple income statement. Sales minus operating cost minus depreciation is equal to EBIT, earnings before interest and taxes. That's an important number. From EBIT, you subtract interest to arrive at EBT, earnings before taxes. Interest is typically paid on long-term debt. So if a firm has $10,000 of bonds with a 5% coupon, then interest is 5% of $10,000. From EBT, subtract taxes to yield net income. Recall that net income can only go two places: be paid out as dividends or be added to retained earnings. The adding to retained earnings is the link between the income statement and the balance sheet. A frequently used figure that's not obvious right here is after-tax operating income, which is EBIT times 1 minus the tax rate. The general outline of a simple income statement is again shown on the right in blue, just to give you the general line item setup. Per share data divides various figures by the number of shares outstanding, which was given 50 million. So earnings per share is net income divided by shares outstanding. For 2016, that's 117.5 million divided by 50 million, or $2.35 a share. Dividends per share is the total dividends paid divided by shares outstanding. For 2016, 57.5 million divided by 50, or $1.15 a share. Book value per share is total common equity divided by shares outstanding. So book value per share is the 940 total common equity divided by 50 million, $18.80 a share. Now we're going to look at the statement of cash flows and the statement of stockholders' equity. And we're going to walk through them in more detail along with the free cash flow calculations. Again, this is not an accounting class, But I do want to take a few minutes to outline where the data for the statement of cash flows comes from, because it comes straight off the income statement and balance sheet. This is the statement of cash flows on the right for Allied for 2016. Following the arrows, net income, depreciation, and dividends paid come from the income statement. Those are the blue lines. Changes in inventory, accounts receivable, accounts payable, accruals, net plant and equipment, notes payable, and bonds outstanding all come from the balance sheet. If the company had issued any stock this year, that would come from the balance sheet. Now, these are all change numbers, the change from the previous year to this year. Ultimately, summing these changes should reconcile the change in cash from the previous year to the current year. For Allied, they went from $80 million in cash to $10 million in cash. Remember, we're dealing with cash, so depreciation is an addition to cash since it's a non-cash expense. An increase in inventory is a use of cash, so it's negative on the statement of cash flows. An increase in accounts payable or accruals are sources of cash. They're positive. Increase in net plant and equipment is a use of cash. It's negative. Paying dividends is a use. Issuing stock or bonds is a source. Looking at the big picture, there's three sections: operating activities, long-term investing activities, and financing activities. Starting with net income and adding or subtracting the sources and uses of cash yields the change in cash from the previous year, which should agree with the balance sheet. The statement of stockholders' equity is really a pretty simple statement. Its only purpose is to reconcile total stockholders' equity from the previous year to this year. For Allied, we start with the retained earnings balance from 2015, $750 million, add net income for 2016, $117.5, and subtract dividends paid, $57.5, and we arrive at the 2016 retained earnings balance of $810 million. If a firm has a negative net income, retained earnings are reduced on the statement of stockholders' equity and on the balance sheet. The last item I want to cover is calculating free cash flow. The formula is given, but it requires knowing where the parts come from. We need EBIT from the income statement. We need the tax rate, which was given, 40%. We need depreciation from the income statement. Those are the two blue lines. Net plant and equipment for 2015 and 16 from the balance sheet, and net operating working capital for 2015 and 16 from the balance sheet. So we need current assets, current liabilities, and notes payable. Following the arrows, you can see where these numbers come from. You do add depreciation in and then subtract it back out. Capital expenditures is equal to the change in net fixed assets plus depreciation. And remember, net operating working capital is equal to current assets minus the quantity, current liabilities minus notes payable. Notes payable is not an operating liability. Now, I'll post this worksheet so you can review it if you want to, since the calculations are shown in the cells. I've used the example from the textbook since it's in the lecture as well. What I want you to focus on is the general format of each of the four main statements and how the elements fit together. You need a clear picture in your mind of the layout and the line items, particularly for the income statement and balance sheet, those elements in blue. Familiarity with the statements will prepare you to answer the questions on EBIT, after-tax operating income, net operating working capital, or free cash flow, the type of questions and problems that are on the quiz and the tests.